So let's talk about the transition from trading traditional futures to and derivatives to crypto.
Sure.
One of the things that I was thinking about before, and I think we talked about it a little bit, was originally futures contracts were done, and to this day I still tell my clients that are like, hey, what do you think about futures or options? I say, don't do it.
Right.
Unless you really have the mind for it, it's not worth it. It's a good hedge for, options, good hedge if you have a concentrated position. But if you really need that leverage, you're really gambling, right?
Right.
As we all know, those of us who are looking to accumulate wealth, invest in equities, and then if you want to stay rich, you invest in fixed income, right? And then you've got futures and commodities. For me, I always thought, futures and commodities are really either a hedge or in anticipation of needing something. So if you're a farmer and you know that you want to grow corn and you know that your input costs are going to be $3 and you're worried that maybe it's going to be $2.50 by the time the season's over, you would actually buy a contract saying that I guarantee I will deliver this amount of corn, and then you've locked in your price, right? Now, if it turns out you have a bumper crop, you can always you're going to make more money.
Right.
But there's there are reasons and situations. Now, there's a lot of companies out there, and I won't name names because I don't want to, but you guys seem to be doing it right. You're allowing institutions the ability to what I like to think of is trade these vehicles, to accept cryptocurrency and be able to hedge what that's going to look like on their balance sheet.
Correct. Yeah. I mean, we generally have two different types of clients. So we have some clients are corporations or institutions that have their own client-facing businesses. Mm-hmm. So they see us more of a sort of like a liquidity and technology service where they're trying to figure out how to offer access to digital assets to their clients. Mm-hmm. So there's a lot of technical integrations and compliance work and due diligence and counterparty risk concerns and things like that. And then the other group of those clients would be groups that are trading more for their own principal risk. So that might be an asset manager or a hedge fund or a miner, or someone who has an interest in physical crypto that is looking for some reason to hedge their balance sheet. The reasons why people engage in those sorts of transactions, if they're involved in the physical production of an asset, like Bitcoin, for example, it's really not all that different than if somebody was refining crude oil or growing corn or something else like they have to make a payment in denominated in yen 1 year from now. What happens if the price of yen appreciates by 50%?
Right.
So there's lots of real world concerns where these markets that were originally designed to create a marketplace where people who were willing to take risk could take the risk off of the people who were willing to lay off the risk. And that's really not that much different in the crypto option space. But it is a fragmented market. It's developing. It's a lot of it is done over the counter. There's really no centralized authority that determines what these things are worth.
Right.
It's a lot of exchanges and traders sort of looking at each other and trying to determine what the price is. So it is a very, very nuanced and there's a lot of that. There's a lot of that. I mean, a lot of it takes place over the counter, in chat rooms and over the phone, and it feels kind of archaic, but a lot of business at the institutional level is conducted this way, and I think that's actually something that the retail world doesn't really quite understand because they're so used to their TD Ameritrade account or something like that, where everything is fully electronic and they never have to talk to anybody.
Right. Yeah.
So
I remember years ago when we first were trading at the branch, and it was muni bonds. Everyone just thought everything was like electronic, and it was like we got these magazines, this little blue piece of paper. I can't remember. I wish I could remember the sheet. It was like clients looking for this. I'm literally looking every day at this little newspaper and call up and say, "Can I get a bid on that?" They just think it's electronic. Like, no, there's work.
There is a surprising amount of that. That's actually one of the things that surprised me coming from the futures industry, where you had the CME and ICE and Eurex and the clearinghouses doing all the work. They built this incredible infrastructure where you've got reporting, they're holding your assets, they're generating the statements, they have margining technology. It's all done for you, right? In this market, because there is no central authority clearinghouse, if you're going to offer these solutions to clients, you have to build those things. So companies have their own statement generation, their own risk management protocol, for better or worse, you know.
And there's no hard and fast regulation, so you have to regulate as best you possibly can, which is probably what got a lot of these companies that are sort of in trouble right now in trouble.
Yeah, and that's an interesting, you know, topic, and certainly a volatile moment in this industry's history. Yeah. Probably not the last, you know, but certainly there's a deleveraging that's occurring right now. And I think that, you know, one of the things I've said this numerous times in the last few weeks, but being at this company and having, you know, leadership that has been through some horrific market cycles and more traditional assets, that in a time like this, that is extraordinarily worthy. You know, it's you know, you have a lot of leadership at many firms in our space where, you know, there are kids, so to speak, running these companies that haven't been through a bear market before, or a real bear market, like a real one where it's not just their asset, but it's everything.
Everywhere.
That's a very different environment. I mean, you know, having a bear market in crypto in 2017 and calling it a crypto winter, all right, that's a bear market in crypto, but that's not a bear market where everything is selling off and the only thing going up is the dollar. You know, so that there's a big distinction there, and I think that's one of the things I've enjoyed lately, just sort of watching our company, you know, navigate this with some poise and grace has been, you know, gratifying.